What are you hearing about the mortgage rates? The mortgage rates are sticking around at higher levels for a bit longer than we anticipated. What's the deal? It all comes down to the latest economic data. This is Dia Irby with this week's Market Update, exploring what's going on with mortgage rates and what the experts are saying will happen next. When it comes to mortgage rates, things like job opportunities, inflation, how much people are spending, global tensions, and more all play a role. The Federal Reserve, the Fed, and its money decisions also have a big impact on all of this. That's what's getting a lot of attention right now. In early 2022, the Fed decided to raise the federal funds rate to slow down the economy and control inflation. While this rate doesn't directly determine mortgage rates, it does affect them. That's when we saw the mortgage rates go up. Even though we've made progress in bringing down inflation since the spike in early 2022, we're not quite where the Fed wants us to be at 2% yet. This graph shows inflation since the spike in early 2022 and where we are now compared to their target rate of 2%. Inflation has edged up a bit over the last few months, influencing what the Fed plans to do. Sam Cater, the chief economist at Freddie Mac, explains, and I quote, "The strong economic data and raising inflation have led to higher mortgage rates," end quote. In simple terms, inflation's impact on the wider economy will be crucial going forward. Greg McBride from Bankrate sums it up nicely, and I quote, "It's the longer-term outlook for economic growth and inflation that have the greatest bearing on the level and direction of mortgage rates." Inflation, inflation, inflation. That's really the hub on the wheel, end quote. It all comes back to inflation. When can we expect lower mortgage rates? Experts think inflation might settle down a bit and the Fed could lower the federal funds rate later this year, just not as quickly as we first thought. Mike Fratantoni, chief economist at the Mortgage Bankers Association, MBA, commented on the recent decision by the Federal Open Market Committee, FOMC, and I quote, "The FOMC didn't change the federal funds target in the May meeting due to strong economic indicators and stubborn high inflation. We anticipate mortgage rates will drop later this year, although not as much or as fast as we previously expected," end quote. In short, it looks like mortgage rates could decrease later this year. But keep in mind, timing can shift with new data, global tensions, and other factors coming into play. That's why it's generally not a good idea to try and time the market. As mentioned in a Bankrate article, if buying a house is the right move for you now, don't worry too much about market trends or economic forecasts. Bottom line, if you have any questions about what's going on in the housing market and how it could affect you, feel free to reach out. I'm here to help you answer your questions and guide you on your real estate journey. Until next time, stay informed and stay positive. This is Dia Irby, your favorite realtor, by your side all the way. Bye now.